folks, it's not looking so pretty right now for Nikola stock as the company set to report earnings in the morning. So we're going to break down what the earnings estimates are in this video, EPS, revenue, you guys know the drill, and we'll break down the charts, which, to be honest, guys, they're not looking good at all, and they're pointing towards more red, at least as of now. So if y'all find value, hit that like button. Make sure to subscribe here on YouTube. It's free, and you might as well get up to 16 stocks for Moo. Link down below. Once you open up your account and fund it with at least $100, you get 5 stocks right off the bat, each of which could be valued up to $2,000, guys, and you get a free share of SoFi stock on top of those 5 stocks. So get on it. Use that link down below. And with that being said, guys, cheers. Let's dive right into the video. So right now in real time, Nikola stock is at $1.01. So it's pretty much on the verge of breaking under $1. We might actually catch it on the camera, guys. The stock's down about 6.5% right now, down around 7-ish cents on the day. And if you peel the layers back a little bit, you're going to notice how Nikola stock, well, actually about a couple days ago it hit 96 cents, so I guess it was under $1 a couple of days ago, but still, this stock is not heading in the right direction. I mean, you guys can clearly see that on the 5-day, 10-day, and honestly, it doesn't take a rocket scientist to tell you that. And if you pull up the 4-hour chart, let me show you this. We have a clear-cut head and shoulders. Let's just talk about that right off the bat, right? We have the left shoulder right here. Boom. You guys see that? We have the head right here. If this thing wants to work, there we go. And now we have the right shoulder clear as day forming right here as we fail to break out of the neckline, being about $1.80, $1.85, wherever that was, right? We hit that back in the middle of June, and now we're struggling there middle of September, heading into October as well. And since we've gotten rejected at $1.80, we've been moving under the moving averages now. We have a death cross, which obviously, guys, is not what the bulls want to see. And you can see it's gotten worse pretty much since the middle of October. So about 2 weeks ago, we went from the mid-dollar range. Now, again, like I said, we're about to fall under $1. And another thing worth mentioning is if I clear the drawing set, let's forget about the head and shoulders for a second. You guys can see we have a descending triangle on Nikola as well. Do we not? Which makes the case even stronger for the bears, right? I mean, look at this. We have lower highs being made, but at the same time, we have support at 90 cents to about $1, right? So if we fall through that point, leg down is coming, and we could be coming right back down or going back down to the 50 to 75 cent range for all we know, guys. Let's just say it could get very, very ugly from there. But who knows? With earnings coming up literally tomorrow morning, anything could happen. I mean, for all we know, they could report great numbers. They can have guidance that's a lot better than expected. They could report guidance better than expected. And this stock does have a pretty high short interest, guys, so it could be one of those that experiences a squeeze, but obviously that could work in the other direction as well. If their earnings are terrible, man, expect this descending triangle to play out and expect more downside. At least that's kind of what I'm doing as of right now. So before we dive back into the charts, let me actually pull up the Safari tab and let's see some key numbers here in regards to Nikola. So let me make my face a little bit smaller. There we go, guys. So we can see here that Nikola's market cap right now, funny enough, is $1.01 billion as the stock is at $1.01, 1.01. Funny how that works. But yeah, man, it's holding on by a thread above $1 billion market cap, and their EPS in the last 12 months, trailing 12 months, in other words, is $1.45 in the red. So obviously, they're losing money. Their beta is a 1.93, which, I mean, guys, come on. It's obviously way more volatile than the stock market. Makes sense why the beta is so high. I mean, it doesn't take a rocket scientist to tell you that. And if we come over here to their financials, not necessarily, or I don't necessarily want to break down their financials too much in this video, but quickly, why not? Let's see. Oh, wait. There's nothing here to see, guys, pretty much in terms of revenue, at least. They're not doing much, much revenue at all right now. Trailing 12 months, they've done a whopping $56 million of revenue, which, I mean, I guess that's a lot considering last year they did zero. And the year before that, they did $95,000. If I zoom in a bit, you guys can see 2020, they did $95,000 of revenue. I mean, probably half of you guys watching this video make more than that a year. I mean, maybe less. I don't know. But yeah, $95,000 was their revenue for the year, 0 the next year, you guys can see, and now we're pushing, or they're pushing 50 million, 56 million trailing 12 months, and of course, they're losing money hand over fist. We're not going to get into that part of, that part of the financials, right? It's terrible. Their balance sheet, let's see their balance sheet. I haven't actually looked at it in a while. So total assets, $1.2 billion. Current assets, $430 million. All right. Cash equivalents, $233 million. Interesting. And if we come down to their liabilities here, guys, total liabilities, current liabilities are at $380 million. So they could not pay, although their current ratio is over a 1, which is good, $436 million over $338 million. That's good, which I'm liking, but they could not pay, if they wanted to, all their liabilities, their current liabilities with their cash right now. They couldn't do it if they wanted to, which, let's be honest, guys, why would they want to do that? They're not going to go and pay their current liabilities down when they need cash. I mean, they're freaking starved for cash at this point. They need as much of it as they can get. They're not going to just go blow it all, on one debt payoff, and they can't even pay off all their current liabilities with the cash. So they're probably going to keep that cash. And look how obviously they need it. I mean, this company's burning it, and look how much they've been burning it. And we'll move on here, guys, to the projections. I mean, look, $840 million of cash equivalents, and short-term investments. That was back in 2020, and then they went to $497 million in 2021. And as of this, date right here, 2022, end of the year, they had $233 million in cash equivalents, which is nuts. I mean, that's come down a huge amount. And if they don't, excuse me, wrong word, dilute. If they don't dilute shareholders by issuing more shares or getting capital other ways, it's not going to look pretty. It's not going to end pretty for this company, guys. In other words, they're going to go out of business. So let me show you this analysis tab quickly. Then we'll go back to the charts quickly. Then we'll wrap up the video. So you guys can see, based on 6 analysts, they're looking to do negative 15 cents in EPS. All right, that's the average. Low estimate is negative 19 cents, and the high estimate is negative 11 cents. So obviously they're losing money, but not as much money as they did a year ago. A year ago, they lost 28 cents per share, so that's going to be a nice increase. The losses are narrowing year over year, which is good. And the analysis for revenue here, you guys can see, average estimate is $15 million. The low estimate is $1 million. My goodness, guys. The high estimate is $23 million. And a year ago, they did $22.14 million of sales. So they're going to be declining in terms of sales, 32% in the negative there. Sales decline year over year, which is not so great overall for this company. So that's a quick rundown on the numbers very quickly, right? Talked about the estimates for EPS and revenue, and their stock, guys, by the looks of it, like I said earlier in this video, it's on the verge of falling under $1. I could be wrong. For all we know, we could rip to $2 tomorrow. Anything could happen. Anything is possible. But by the looks of it now, man, it is not looking so good. So what do you guys think? And full disclosure, I don't own Nikola stock. I don't plan on buying it, but I am watching it for a potential trade. And by buying it, I mean long-term investing, right? I'm not looking to buy it for the long term. I might hop in and out of it as a trade tomorrow around earnings. I mean, that's going to be a very big possibility, guys, considering how volatile this thing is around earnings. But for a long-term play, there's no way I'm buying this unless I'm looking to screw around with $100 or a couple $100 or an amount of money that I'm willing to lose, which I don't know. I'd rather put that elsewhere at this point. But yeah, let me know your thoughts in the comments. Hit that like button. Make sure to subscribe. And do not forget to get up to 16 stocks for Moo. I'm telling you guys, this is the best promo right now by far. Just use that link down below or go to stocksurfest.com/Moo. Listen, guys, once you open up your account and fund it with your initial $100 deposit, you get 5 stocks right off the bat, each of which could be valued up to $2,000. And you get a free share of SoFi stock on top of those 5 stocks, which is limited time. And if you fund your account with at least $1,000, you get 10 more stocks, totaling, you guessed it, 16 stocks, guys. So get on it. Use that link down below. And of course, that is an affiliate link. It helps out the channel. I appreciate you guys as always. And with that being said, cheers. I'll catch you in the next one.